Anticipate, don't improvise. My process is purely logistical, narrowly focused by design. I'm not here to take sides. It's not my place to formulate any opinion. No one who can afford me needs to waste time winning me to some cause. I serve no god or country. I fly no flag. If I'm effective, it's because of one simple fact. I don't give a fuck.
Welcome to Market Makers, everyone. Guys, I hope you had a fantastic weekend. We had the markets closed on Monday here in the USA. We had a holiday. And if you were busy over the weekend, maybe watching playoff football or maybe just having a life, you may have missed some key events over the course of the last week. That will explain to you why the market is selling off, because really what we have going on is a mini April 2025, yet again, another tariff sell-off. So you may have heard, if you're on X or just have a TV, that Trump wants to buy Greenland for strategic defense, for mineral rights, whatever the reason may be. Well, the Danes, Denmark, quasi-controls Greenland. So they sent over an envoy last week, towards the middle or end of last week, to negotiate with the Trump administration. Nothing came out of it. Some other European leaders felt the need to come out and comment on it. Negative towards the USA, positive towards Denmark, your Keir Starmer in the UK, Macron in France, about a half dozen other countries. So you're looking at 6 or 7 countries total. Well, Trump hit them all in retaliation with a tariff, a 10% tariff. That tariff goes up to 25% come June 1st, if no deal with Greenland is done. So that is what this sell-off is about. It's not about whether you agree with it or not. That's about what the sell-off is. It's about fear of slowing the economy down, hampering trade, international trade, yada, yada, yada. So again, it's an emotional market. It's an emotional driven event. So we need to go over this in the charts and look at our key support levels, because we were doing some good things. We had the markets at or near all-time highs. Looking at the Russell, the Dow, the S&P, NASDAQ. You had crypto starting to test the top of its accumulation ranges for that nice rebound back up. We had Bitcoin up at 98K, Ethereum back up at around 3,400, and then all of this news broke. Everything started breaking down. So where's it breaking down to? How low can it go? And are we still getting a bounce? Going to cover all of that in this video. By the way, big announcement. As you guys know, since we started our Discord back in 2021, we've had this Discord membership. Some people don't want to join Discord, don't want to have an extra app. They're not into that, but they want the videos. Well, by popular request, we started a pro video membership. Much lower cost. It's $15 a month. It's on YouTube. You can click the join button, select the pro video membership. You get all of our market updates throughout the week. Our block state updates, our education, our indicators, my updates that I do, market deep dives. Just released a new education video this past week. I'm working on a new series on wave symmetry. I think you guys will really like it. So if that's your bag, check it out. It helps support the channel. And if you want to trade these markets, check out SimpleFX or Bitunix. They're in the video description. They help keep the lights on. They bring you this free content. So let's go ahead and start. Looking at Bitcoin, the beach ball chart, the Bitcoin top and bottom chart, where are we at right now? Well, where we are at, all we have to do is look at our RMA. Our RMA is at 66.2. What does that mean? For a quick refresher, we have to cross 69K. When the RMA crosses 69K, within 4 to 6 weeks, we should have a top. That top could be your right shoulder, right around 108 to 116. That top could be a new all-time high. Don't know where that top's going to be, but that is what should happen if this indicator plays out again. When did it play out before? 2021. Crossed the previous cycle high from 2017 at 19,666. Top came in 4 to 6 weeks later. Then we got a big decline. Did the same thing back in 2017. Crossed the previous cycle high from 2013 at 1163. 4 to 6 weeks later, got the top. Boom, big drop. So we'll see what happens with this right now. It only moved 200 points last week. I mean, it's barely moving. As a matter of fact, we'll probably have to move this red box over to the right because it needs to cross 69K and then the countdown timer begins. So let's look at a fear and greed update. First, let's check crypto. Crypto was at the higher end of neutral. Now it's down at 42 with the sell-off. And let's look at the markets. The markets, remember, were in greed at 66. Now they're back in neutral at 52. Guys, a lot of people are asking me on X. We're having this discussion in the Discord. What do I think is going to happen? Do I think we're breaking down now? I know a lot of people are saying that this is the drop to 74K before the next bounce and then capitulation, right? Other people are saying this is the top. We can't go any higher. Look, my thesis is still the same. I'm going to show you when we get to the charts on the markets, but for cryptos too, I'm still looking for a big rebound back to the upside. Bitcoin 108K, 108 to 116. It's going to make that decision there. We're going to look at it in the chart, but that's what I think is going to happen. And from the macro perspective, you have the tariff sell-off once again, but you have to understand you're also just in the beginning part of earnings. Very unusual to top and have a major sell-off with very strong earnings. So far, that's what we've had, is very strong earnings with a heating up GDP, the strongest GDP Q4 estimate since the pandemic recovery with trillions pumped in. So it would be very unusual to break down during those earnings. Now, if those earnings come in bad, like Mag 7, then yes, you could have the breakdown. But we're going to look at the timing on this as we click through some charts. But here's total, all the money in crypto. Remember, just looking at some basic TA, right? Sell off low, you have a rebound. Retest the low, a higher low, make a new high. As of right now, you're still holding a higher low. This is a bullish pattern, an accumulation pattern. You tried to break out of your trading range of 3.2 trillion. This is when the tariff debacle happened, and this is what you got from it. I believe it's an emotional event. It's going to rebound, snap back to the upside when cooler minds prevail. If we look at USDT dominance, this is people cashing out, going to stable here for dominance. If you look at this, the 50%, 6.216, you can see the rise, right? Look at the rise that you've had since basically Saturday when everything started peaking up. Big rise up to the 50%. This puts pressure on crypto prices. So you want to see this hold up right around here. If it goes higher, it's going to put pressure on crypto prices. So that's just another chart to pay attention to, kind of an inverse chart. Looking at our three peaks in a domed house. I mean, again, it's been over a year we've been talking about this thing. It's taking a long time to form on a weekly, isn't it? Beautiful George Lindsay pattern. Three peaks, almost co-equal peaks. Domed house. What is a domed house? Nothing more than a head and shoulders. Left shoulder formed, head formed, right shoulder. Need the rebound to get the right shoulder. If it's going to be bearish, it's going to break down. As you guys know, vis-a-vis Fibonacci, if you can flip 108 to 116, that's a 786. Bias is a new all-time high. New all-time high target, 154. So like I showed you on the beach ball chart, are we getting the lower high or are we getting the higher high, right? Lower high, 108, 116. Higher high, 150K. That's what I'm looking at on Bitcoin. Which will it be? We're going to find out soon, I believe. But, this all takes time, and it's all about being patient, watching these moves. You see geopolitical events driving the market, and you see other events driving the market. We look at Bitcoin on our lunar cycles. I mean, again, to the day. Sell off to the day. On Sunday the 18th, Bitcoin started at 6% drop to its current price level. Next pivot's February 1st. So we'll see if these levels hold up. Let's look at some support and resistance and some targets. You looked at, the reason I keep looking at total is because it's the same pattern on Bitcoin. I mean, it's quite that simple, right? Key level on Bitcoin. Well, first let's go over this. Big sell-off, right? What's the difference? Again, some of the differences when people are saying this is going to collapse and go down another level, this is accumulation to me. Part of that reason is, again, you can look at this through price and time with that lens. If you look at it through that lens, the longest accumulation, which became distribution, you had was 17 days, right? That was the longest period in this big sell-off from 126 down to 80, 17 days. Right now, you are at 60 days. This is accumulation. This is chop. This is chopping people up who are buying here. Then it dips down, goes back up. They buy the top again, dips down again. This is just how markets work. But distribution happened quickly. This was a quick sell-off event. The one time you went sideways, 17 days, you're at 60 days now. 60 days, and you're making, look at your pattern, low at 80K. You have your rebound, right? Then you have a retest at a low, higher low. Then you have a rebound to retest the high. Now you're still holding this higher low. Again, bullish higher lows. You try to pivot out to the upside. You hit 98, and this is when the tariff sell-off started, and you rolled back down. So again, emotional-driven market. If you look at some support levels here on the daily, we're going to go down to like the 3-hour. You really would like to hold 89. 89K is going to be a key level because you do have this disjointed double top here on the daily like this. If that breaks down, that opens up 86 just beneath you, okay? So you really want to try to stay above 89. Let's look at some indicators on the daily. Momentum is starting to get bearish, of course, is the daily. Let's look at our volume delta here. I mean, you're still at a key support line, an absorption line here. You're still above it, I should say. Look at the double top. I mean, you can see the double top formed on your volume, formed on your RSI. RSI is in a bearish territory. So yeah, you want to try to hold above 89 would be good. Let's look at this on a 3-hour chart. 3-hour chart. Just another way to look at it. It gives you more candles. Some people really like that. I like to trade on the 8-hour and the daily. But when you're looking at a 3-hour chart, you can just see this, right? Your 80K. So your climactic sell-off, your automatic reaction for a ceiling, your retest of a low, which came in as a higher low, your retest of the ceiling, you pulled back once again for a higher low. This would have been your Livermore pivot to the upside. You broke out of the trading range above that number of 94.5. We've been talking about literally for weeks. You broke out above it, you tried to hold it, the tariff scare happened, and you sold off, right? So that's all that boils down to. That's the mechanics of this pattern of what you're seeing on the screen. And again, it'd be nice to see this hold above 89K, because if it does not hold above 89K, well, then you have to look at this 86 and beneath that at 84. I'm just looking at the bottom fractals here in the range. There's your 86 and there's your 84. So it's really that simple, right? I mean, people try to complicate TA. I love to use advanced Fibonacci techniques. When you're looking at this, where's your Wyckoff fractal? Right there, right? All that accumulation on a small time frame here of a 3-hour. Let's just draw this out. So you're in that zone where you should hold and or bounce. If that doesn't work, where's your next zone? Right down there at the 86K, right? So this is just a way to look at it level by level. Let's look at Ethereum. Ethereum here is at 3,000 at the time we are recording right now, just after noon here on the East Coast. So it's at 3,000. You see this pattern here. Again, lots of weakness in Ethereum right now. Wave up, wave down, wave up, basically a type of double top. Will we get all the way back down to that 2,700 level? I don't know. We're going to drill in a little bit. This is a 3-day chart, right? Need some more candles to look at this. Where's my Ethereum rebound? At a minimum, I'm looking at Ethereum going to 4,000 to 4,500. So whether this resolves to the upside, holds the higher low, starts to chop up, I think you're getting this move to the 618 before you get any type of major breakdown. Okay, I still think that reflexive rebound is coming into the marketplace. So we'll have to see it play out. First thing we gotta do is hold our key support level. So let's go drill in a little bit. Let's look at the daily. We're looking at the daily. Let's go to the low, your sell-off low here, 2620. Pull this up. Fibs would be useful. 50%, 618, 786. See what we got. 50% from this low to the high in the range is 3,033. We held it for a little bit. Now we're breaking down. Again, you have yet again another little double top right here. You see this? You have a double top. That's kind of breaking down. Next level is 2936 and then 2800. Key level, that would be that 2800. Same with that 2900 right down there, 2889. You'd like to see those two levels hold because, again, it's all about the pattern. You're low, you're high, higher low, and then you have a co-equal high testing that trading range. You would like to see this resolve as a higher low, meaning hold that 2900 level. You're at 2996. Continue the higher low pattern because eventually it will resolve with a surge to the upside to test key resistance, that reflexive rubber bound rebound. Let's look at the indicators. They're all going to be bearish. RSI bearish. Volume delta obviously selling. So you want to watch that as well. Momentum still turning over. Looking to go bearish on this. So if we go to Ethereum here, 3-hour chart, just another look at it. Look at some patterns you can find, right? double top on a 3-hour chart, right at your top, right up here. It looks like about a 786 hit right here. So we can look at this double top, get some projections of where this would go. Fibonacci projections, see if it panned out. Beautiful hit at the 1618, got a rebound on the 3-hour time frame, multiple candles at the 200% at 3,100, and now you had the 2618, which you just came down beneath at 3,005, and now you're at 2989. So you want to watch these levels, watch 2,900. It's obviously your next key level. Here, just looking at the fractals as well. All right, guys, let's jump over to the S&P and NASDAQ real quick. So what I'm about to show you here on the S&P on the weekly chart, you're not allowed to look at. You're not allowed to consider these data points in the marketplace, because if you watch the media, they will tell you, never try to time the market. It's about time in the market, Bob. It's about paying that fee to your broker. Don't try to time the market, just buy and hold. Okay, that's fine. Well, as a trader, I like to see if the market in a particular cycle has tendencies to peak around certain times, and that's what we're going to look at right here on the S&P. So 2 key dates in the first 3 months of the year you need to remember. First one is mid-February. Mid-February peak over here in 2020, mid-February peak over here in 21, and then a mid-February peak in 23, and a mid-February peak in 25. I'm going to delve into these in a second. The second date you need to remember, if you can survive the mid-February peak and then an ensuing correction, if you can get past that date, is the spring equinox, which is typically around March 21st. So basically the end of March. You had a spring equinox peak over here in 22, spring equinox peak over here in 24. Let's go ahead and remove this. Now, the key thing about the February peak, the 2 biggest peaks and drawdowns happened on the exact same day. February 19th, 2020. It was a Wednesday. February 19th, 2025, on a Wednesday, you had big sell-offs, 1,200 points in the pandemic, 35%. And of course, you did 1,300 points over here if the tariff sell-off, 21%, to the exact day. February 19th, all-time highs, then you sold off in a big way. February 19th is a date that's coming up. Now, earlier in this video, I mentioned we are in earnings. Earnings so far have been coming in strong. Unless those earnings turn sour, particularly on the important companies like the Mag 7, I don't anticipate any type of large drawdown prior to getting at least to the mid-February, right around that February 19th date. Important date to watch. If you can survive the February 19th peak, you can push out to the spring equinox right around March 21st, and you have those examples here on the chart as well. Big spring equinox peak back in 2022. Got the spring equinox peak. Of course, this was the sell-off with the tightening, but that was a 1,000-point drop, 21%. You had a spring equinox correction over here in 2024. This was a nice drop as well, about 6%. So you get these peaks, but those are 2 key dates. Mid-February, particularly February 19th. If you can survive that, you get out to the spring equinox. Now let's look at some TA. If we look at TA, we're looking at their sell-off today, guys, down 1.5%. This is S&P cash. When we look at this, remember my prediction for 2025 was 69.91, rounding it up to 7,000 on ES. This is the cash. This was the target, 1618, 69.58. As you can see, we hit target. Now, what I think will happen once we get past this tariff sell-off, tariff pullback as of right now anyways, it's not even a pullback, it's a 1.5% move. Pullback need to go down 3 to 5%. But you have a nice little selling happening today, selling pressure. Once we get past this move, look, your ceiling here on cash is 69.58. If earnings continue to come in strong, I think you're going to push up. The next level up was 7,500, right? 74.59 on cash. Maybe you split the baby at 72.50, something like that. But we have to see where this bottom's at. A lot of fear in the marketplace right now. Worried about growth, worried about earnings, the additional tariffs to the 7 European countries, but we want to see what happens here. If we look at some of our indicators here on the cash, you have the RSI in the bearish territory. Let's just look at some key levels here as well on S&P cash. Going to look at this from a fractal perspective. You have that low at 68.24. You're at 68.35. See if you can hold that. That next level low is 67.20. Key concept, guys, there's your pullback, right? The pullback we were looking for in November. Everybody told you the market was crashing 50%. I said you're going to get 3 to 5%. You got 5.5%, but that put in your low. Then you made a rebound high. Then you made a higher low. Then you made a higher high. And as of right now, we'll see if this higher low holds up. 67.20 would have to be taken out for this structure to change to a bearish potential structure. Right now, you just have volatility in a range and an upward trend. Important concept to understand. Let's check out the NASDAQ. NASDAQ, same thing. What was our 2025 target? NASDAQ cash. 25,733. It was hit in October and hit repeatedly after that. Okay. NASDAQ cash target. Now, if we look at this, does this look like the market's crashing? No. You're at 25,162 on a weekly time frame. Where could this go? Again, if earnings continue strong, I could see this flip 25,733, push up towards 27.9, which again was 28.2 on NQ, NASDAQ futures, okay? So this is on the weekly time frame. We're going to zoom in, but this, as of right now, is a sideways structure. This market structure does not change unless you take out key market structure. You had your low in November. Then, of course, this is the weekly, keep in mind. We're going to look at this on a daily. Low, higher low, rebound high. You still have a higher low in place. You have to take out 24,647 to start changing this trend, to come down and test this bottom to see if you can break it. As of right now, you're still very close to all-time highs. If we look at this on the daily time frame, you can see our target hit multiple times. Obviously, tech has been struggling, but when you look at this, again, there's your low, there's your higher low, right? And as of right now, you still have your higher low in place. So again, bullish recovery structure of a low, higher low, higher low. Your ceiling is 25,733. That needs to be flipped. Maybe you split the difference, just like we talked about on the S&P, but that next level target, if earnings continue strong, see if we get a rebound and a push up. Watch those key dates. Mid-February, late March. February 19th, March 21st. Watch those two dates. We'll see what happens with this tariff sell-off. See exactly where it lands us. Let's look at the indicators really quickly on here. RSI turned bearish on the daily time frame, to be expected. Volume delta shows selling. And of course, we can look at the momentum. That's obviously turned bearish as well. Guys, check out the new membership. Would love for you to see our videos that we put out every week, as well as consider joining our Discord. Fantastic community there. Love to talk to you guys in person there as well. Have a fantastic week.